Okay, folks, welcome back. This is our economic calendar for the coming week. On Monday, we have a bank holiday for GBP. 4 a.m. London Open. Eurodollar has a medium impact German IFO business climate. And day 3 of the G7 meetings will be conducted on Monday, August 26th. We have core durable goods orders, high impact for the dollar. And 10 a.m. we have FOMC member speaking. On Tuesday, New York Open, we have GBP, medium impact, speaker, 10 a.m., high impact, consumer confidence, high impact for the dollar, and medium impact Richmond Manufacturing Index. Wednesday, 10:30 a.m., we have high impact crude oil inventories that will affect Canadian dollar. Thursday, August 29th, medium impact all day long. There will be German preliminary CPI and 8:30 a.m. high impact preliminary GDP for the dollar. Friday we have at 5 a.m. medium impact CPI flash estimate, 8:30 a.m. New York Open high impact personal spending and core price index for the dollar index, and then we have Chicago PMI at 9:45 a.m. All right, so let's move over to the charts. All right, folks, here we are with the dollar index. This is our daily chart. As I mentioned in the last few recordings and reviews, we've had our concern about this top of this range here. And the focus was specifically on this rejection block, which is the highest up close candle. And we swept through it today, intraday, and we were unable to maintain any stability above that price. And we quickly rejected and went lower. Now we also went through the middle of the dealing range, which is this low now to this high. So the concern is we're going to be running the liquidity out below here and then reaching for the equilibrium of the dealing range between this high and this low. If it continues to trade lower, we have liquidity pool below here and the imbalance, busy. And then we have the volume imbalance down here that could need to be sorted. So I don't think that it's near-term bullish anymore. Long-term bullish still remains, but near-term bullishness has been pushed to the back burner, if you will. If we look at the lows here, everyone's going to be looking for reasons to find support on some trend line of some sort. I don't want anybody here thinking anything like that, obviously, but just want to make a comment real quick that if you're looking at the trading view Dixie DXY symbol for the dollar index, it's going to look different and it's not going to show that it went above the rejection block, but you can still take it back to the top of the dealing range, which is the old highs back here, and you'll see that it did in fact come back up to that and failed. So the same premise, what we were expecting on this chart, the rejection block, which is it's not the highest premium array, but it is before you get to the old high and then the liquidity pool above that. So we're really deep in a premium and we rejected as we were expecting. I outlined this very specifically, and I said that I was concerned about this particular event happening, and like I said before, it's just a matter of experience. I don't feel that there was any way for me to more adequately explain it away than just that. It could have very easily traded higher and then I would have been wrong, and that's okay. I would have been fine with being wrong. Once in a while, it's going to be good for you to see that I'm wrong. It just so happens in this instance that over 2 decades it's a lot of experience to lean on, and that's one of the benefits of being here. All right, so we're looking for a continuation on the lower and specifically down below here. So a sell side liquidity pool resting right there. There's really no imbalance in here. I don't like anything as a bullish order block here. The structure right below here, I think, is the liquidity they're going to want to tap. If you look at the range between the low here to the high, we'll measure that just to get a premium to discount. Notice that equilibrium is right below those old lows, so that would, like I said, we want to see it come down there minimum before we expect any kind of a bounce. Not that I would expect a bounce there, but I'm thinking that to get into a discount, they're going to want to run those that liquidity pool in the form of sell-side liquidity. And then below here, and then all of the imbalance that's over here, the BISI and volume imbalance. But we got to take one level at a time, not try to get too ahead of ourselves. Again, near-term bullishness has been put to the side. Bearishness on the short term. What changed the short-term bearishness? It has to get back above Friday's high now. That becomes the turning point, or the factor that negates any near-term bearishness. All right. So we're going to quickly run over to the euro pound. This is our daily chart. I'm zoomed in kind of tight. I'll zoom out in a moment, but we're looking at price consolidating here. I mentioned how we were sitting at this level and I didn't feel that there would be any kind of old highs finding support, which is like a traditional support and resistance theory. I said that we would want to come down here and clean up this BISI, buy side and bounce, sell side inefficiency. Specifically training our eye on this right here. This level is a breaker. We have a low, high, a lower low. The stops resting below here were swept. We had displacement. Price is coming back down into this level right here. Okay, that was the reason why I annotated that in my previous recording. Well, I don't know if I really annotated it. I just drew your attention to it really. And we'll look at the lower time frame in a minute what this blue line is because it's salient to this particular chart. But we were looking for price to reach down into this area here, and that would be the objective for euro pound. Now I want to talk a little bit about cross displacement manipulation. Now when we refer to this pair, it's going to be very germane to how you trade the euro dollar or the British pound versus the dollar, okay, or fiber and cable. If, as we indicated in the last session, that euro pound was bearish and that we would see it trade down to this level here, highly specific. We had a direction in mind. We had a level to look for, so we were looking for a specific discount array. It's a bullish breaker, and it does not require us to trade down here and find a rally. It's not what this was. Initially, it's just to draw on liquidity from where price was and where price should go. There's our range. Okay, so that's our potential opportunity. For this pair, I use it. I don't trade euro pound. I use it as a decision-making pair. So I use dollar as a barometer, whether I should be bullish or bearish. Am I in a buy program or a sell program? And if it's in consolidation relative to the dollar, then I have to rely heavily on euro pound. Well, since we've been in a consolidation on dollar index, my analysis takes me to this pair here, which is for the purpose of cross displacement manipulation. Now, if I'm bearish on euro pound, that means that the euro dollar is going to be bearish and pound dollar is going to go into a consolidation. Or pound dollar is bullish and euro dollar is held in consolidation. That's the premise. That's what you're looking for based on what I said on Wednesday relative to this pair wanting to go down to this level here, which it indeed did. How we take that information is we go into euro dollar and cable looking for these conditions, because the analysis led us to believe that euro pound should go lower. So right away, from an algorithmic stance, we go from one thing to the next. Dollar index, we're in consolidation. So where do we go next in our analysis? We go to cross displacement manipulation. Whatever pair you look at, for instance, if you are a yen trader, you could look at euro dollar, euro yen, pound dollar, pound yen. Look at those, and you're going to have one more extra step with that, but it's the same process of using these types of filtering. You're going from one major macro view of the dollar index, from a buy or sell program, or are we in consolidation? If it's in consolidation, then you just drop to a intermarket relationship. And for me, since I trade predominantly the euro dollar and cable, then I'm going to be looking at this particular cross, because this is the pair that they use to manipulate the majors. So I want you to have this in your notes. It's spelled out here rather clearly, and everything would be said in the opposite if euro pound was bullish. Okay, just replace everything you see here in terms of the pair, the bullish or bearishness, and consolidation would be the opposite of whatever this would be. Okay, and again, it's taught in the mentorship core content, so don't go crazy. Don't send me emails about all this stuff, because this is things that we'll be repeating over and over and over again, and eventually you'll come to those specific lessons in the mentorship core content. I want to drop down into an hourly chart, and these two blue lines here, relative to the previous chart and the information I was providing you, if we're looking for euro pound to drop, that means we're going to be expecting euro dollar to be in consolidation and cable to rally, or euro dollar to drop and pound versus the dollar to be held in consolidation. Between this candle and this candle, okay, let me show you what they are. That's this candle on the 22nd of August, and this candle. You can see price has dropped precipitously for euro pound. We're not going to look at this slide anymore. We're going to go over to the euro dollar. And right in here you can see what is the euro dollar doing at that same time. It's part of its original consolidation during the entire week. So is it moving up? Is it moving down? Is it held in consolidation? It's held in consolidation. On the same day, August 22nd, what is cable doing? Tearing off to the upside. So between those two currencies, we have euro consolidating, cable tearing off into new highs, running above equal highs here and running into buy side liquidity. This is going to create that catalyst that causes euro pound to decline or drop. So that's what that looks like, and how you find it in the charts. And you want to go back and look at instances in price action whenever you see euro pound create nice moves intra-week or intra-day. You collect a lot of these moments and save them as hindsight examples. Now obviously you know that we don't have hindsight here as our only teacher, because I outlined exactly what was going to happen before it happened. Which leads me to the next portion of the teaching today. For some of you that have just recently started, there is lessons in month number 7 where I talk about short-term trading, and I give you specific market templates for the week, how certain weeks will behave and what you should look for from a general template standpoint. And I want to show you that now relative to the euro dollar. Okay, and this is our consolidation where we have sell side liquidity and buy side liquidity obviously and easily identified. Then the market goes lower, Thursday crossing over into Friday, and then Friday has an extremely large up move running into some obvious premium array. This is exactly what this pair shown. Everything you see in the euro dollar chart is exactly been identified back in, what was it, 2017? Yeah. And I have that drawn out in the journals from the 1990s. So it's a lot of things that just repeat over and over and over again. So again, you'll see that very chart. The only thing different about that chart when you get to month number 7 is that it'll say possible reversal or potential reversal when it gets up into the premium array. You always have to consider that anyway, but I'm not suggesting that's the case here. I think we probably rounded out going into November for euro dollar and cable. That remains to be seen, obviously, but right now certainly looks convincing. And we're going to err on that side of trading, so we're going to be bullish, euro dollar bullish, cable, and see where we go. I also said on Wednesday, and this is one of those things where if you're on the fence about whether or not there's any real value here, if I'm not really teaching you how the interbank market works and how our delivering price, you really got to go back and listen to the presentation for the euro dollar on Wednesdays. Wednesday's video was just really good. I mean, I hate to sit here and beat my own chest, but I kind of like talk to you like you were a loved one. Okay, I talked to you really like you were my son or my daughter, and I wanted you to understand, almost like a parental role, that there's consequences to not following through and sticking to something. And if you started this, it's really important to stick with it. Don't give up. Don't be discouraged or disenchanted really by what you believe your progress should be, because what you believe your progress should be and what I know your progress is if you complete each individual monthly core content, I know where you are. I know where you should be, and everything that you're feeling about adversities and how hard it feels and you feel like you're not getting it, that's all normal. Okay, but the video presentation where we had the analysis portion of it, this may have been lost in the long woodshed moment, come to Jesus meeting we had at the end of the video, where I was kind of like talking to you, like I wish I would have been talked to back in the 90s. Those are things that I needed to hear myself, but no one was doing it. And it was very hard for me. A lot of prayer, a lot of feeling lost. I had to endure all that. You have the benefit of having someone that has done this so many times. I've walked the road so many times. I know what I'm doing. And I know sometimes it feels like, well, he's did a video here and he says really he doesn't know what he's doing. He doesn't know what he's expecting and he should know better than that. No, there's going to be times where we just simply have to wait for more information. The new students are the ones that send me a plethora of emails. Why would you say you don't know what's going to happen next? I thought you understood or know what's going on. I will know what's going on when I get the information. The price action has to give me specific signatures. Otherwise, I have to wait. It's as simple as that. But if you've ever had any doubt, okay, if you've ever had any doubt about what you're learning and if there's any validity to it, again, go back and listen to the entire presentation on the euro dollar portion of Wednesday's video. And I explained that these two specific PD arrays, this is our liquidity void, this is our SIBI, sell side imbalance, buy side inefficiency. And down here, we have a fair value gap. And we have liquidity that I added this really for the purpose of Twitter, but you always know what's above equal highs and what's below relative equal lows. It's common knowledge. Even people in the free lessons know what that is now. But I said that on Wednesday, which is here, when the market was trading here and we were sitting right about here, I said that we would probably want to run up, take these equal highs out, and then run for the sell side liquidity and run into here. I was willing to sell short if we would hit this and then run it down to here. I also stated that whichever PD array is hit first, the opposite would be hit second. So in other words, if we would have hit this one first, then it would have went down to here. But I said, I think that we're going to go down here first, and then they'll use the Jackson Hole Symposium and run it up into this area here. And that's exactly what happened. Now, I got a lot of emails, a lot of direct messages asking from people in the mentorship how I was able to forecast that. The slide I just showed you that you find in month number 7, it's actually under Seek and Destroy Friday continuation or Friday explosive price move. So I don't know exactly what it is, but that same template is the same whether it's a consolidation or if it's Seek and Destroy. Okay, so you can see that every previous high is taken. Here's the low. We have a low that's traded, and I'm not sure if it really went through that or not. Here's the low at 1065, and here's the low at 1065, so it's the same here, but it does blow it out here. These highs get taken out here, so it is essentially a rather mooted Seek and Destroy, but nonetheless, even if it wasn't really wild and whipsawed like this, taking out highs and lows. It's still the same premise, consolidation leading to an event down here. What is that event? That event is the Jackson Hole Symposium. It was the precursor that I led up to last week before the week even started. I said we're going to see volatility this week, Thursday and Friday. If you don't know what you're doing, do not trade. Don't do it. And invariably, some of you did, and you lost a lot of money. You did not listen. Okay, you didn't even listen. Some of you were just simply looking for continuations of the down move, going short on euro, and this screen here surprised you. And I don't know why it would have surprised you, because if you just would have listened to the video I gave you on Wednesday for the euro dollar, I outlined this very thing right here. So again, if you're not going to listen, you can't be frustrated with your results. Some of you are just arm wrestling me, and I don't know what you're listening for. Like if you're not going to listen to what I'm outlining and giving you the reasons why I think certain things are going to happen, why are you here? You have to listen, okay? You have to listen, you have to take notes, and you have to look for specific things to happen, because I'm drawing your attention to it. Remember, you're in sniper school. I'm your scout. I'm pointing, you're shooting. It's all on you. If you don't want to practice, then don't complain when your results aren't good, because you have to absolutely practice. I gave a lot of examples also this week through my Twitter, how I practice intraday. You can see how really crisp the responses are on a 1 minute chart. I saw a video by, I can't think of the guy's name now. He's on YouTube. He just did a video comparing himself with me or whatever. And he made a point about how I only trade euro dollar and British pound. Now, everyone thinks that, like I can't trade anything else and I don't know how to find anything else. And I just said, okay, what am I going to use today? And go in and trade the dollar CAD. And I went in with a very specific purpose in mind. I knew it would be in a mess, and I was still able to pull the liquidity out of that, both directions, up, down, up, down, up, down. In that mess, over 100 and some pips. So I don't need to be here every day. I don't need to work hard to get my 50 to 75 pips. And that's what I'm trying to communicate to you. Now, if you want to go crazy, like I did in the early 2000s, and sit in front of my charts and trade Asia every day, trade London, trade New York, trade Asia, trade London, trade New York, I did that every single day. And I got burnt out. Made lots of money, lots of money. But my relationship was taking a toll as a father and a husband. So again, everything has to be balanced. You can make this mentorship into whatever you want it to be for you personally. If you want to take 300, 400 pips a week out, you have the tools to do it. But coming in right away, is that realistic? Absolutely not. It's absolutely not realistic. I focused on these two pairs, and this is also an answer to an email. I said I wasn't going to do this on Wednesday, but I had to do it because I really want the people that are sending it, that are new, not to send it to me again. Okay, because I'm not answering your email because there's too many of you asking for it. So I'm telling you verbally in the recording because I know you're paying attention, or you should be paying attention. I don't want to cover any other pairs because it dilutes my attention and it really weakens the presentation style and the teachings that I can provide if we just focus on the pairs that I watch every single day. And if you look at what we were doing in the last year and a half, 2 years, compare that with the first year's old live sessions. I was trying to do what everybody else was wanting me to do, and I can't do that. I have a very hard time to focus, and anything added to what I'm doing right now will just simply weaken the product, and it'll weaken me as an educator, because you don't need to worry about what the other pairs are doing if you're still learning. Because if you're asking about other pairs, there's only one reason why you're going to ask me for anything outside of the euro dollar and the British pound. It's because you're trying to trade with live funds and you want me to kind of like pat you on the back and say, yeah, that's a good idea. Not directly, but if you're looking for something and I say I think it's going to go higher and you've been wanting to buy it, you're going to go in there with live funds. And that's stupid. You're not learning anything from that. You're not submitting to the process I've told everyone to do when you came in here. You have to listen. That means no live trading. All you're doing is conditioning yourself to chase money. If you chase money, you're going to have emotions. If you have emotions, you're going to have fear and you're going to have greed, and you're going to fail. It's as simple as that. I don't guarantee anything in terms of how much money you're going to make or if you're going to be profitable at all, because those characteristics in certain people are too hard to overcome as an educator. Like, I can't fix that in you. You have to address that. So I can guarantee this: if you submit to the process and do everything I tell you, success is inevitable. How long? That's the variable. I don't have that figured out for everyone because everyone's going to be uniquely different. So I say all that just to remind you that you probably forgot or didn't remember that I said specifically about the euro-dollar what we see in our charts right now. I haven't changed anything here. It's everything as we, well, that's not true, Michael. I don't believe I had this because I did this intra-week, drawing this out and making annotations relative to the liquidity pools. But the rectangles here in the context about what it's done here, that was explained to you on Wednesday. Now, this is the market. Okay, this is the market that the European Central Bank delivers price from. Now, I want you to think about this for a moment, okay? This is the market that one classification of traders say is completely random and you don't know what's going to happen. And then there's others that say you can't rig a market like this and no one knows what's going to happen before it happens. I'm going to put it out there. Chris Laurie says that there is no way that you know what's going to happen in price next. Maybe he thinks that and believes it, but I don't believe that. And I show it to you every single week. Now, I don't mean that to be disrespectful, but like I said, I got a lot of people from his group in the last 2 waves of enrollments. And I get a lot of compare and contrast. And like I said, you're in here on month 1 and month 2. You got to get it a little bit deeper, and you're going to see, and not that there's anything in month 1 or 2 that is close to him at all, but there is, I mean, I'm like light years beyond anything he does. So again, it's just a matter of how much time you put into this. You'll see that there is a completely different perspective being taught to you, okay? You're not getting this. You're not getting weekly profiles from any other teacher. You're not getting daily templates. You're not getting this precision from anyone. And I need you to really just pay attention and stop trying to compare me to other people, because there really isn't any comparison. None. And I don't mean to be arrogant. I don't mean to be anything like that here in the mentorship, but there's a lot of you new guys that just simply want to compare apples to oranges. And if you just spend some more time with me, I promise you all that's going to be put to bed. So again, we had to run down into the discount array. A discount array is like a bullish order block, a liquidity pool, running on sell stops. It could be an old low or an old high. In this case, we had mapped out an old fair value gap and a SIBI here, which is sell side imbalance, buy side inefficiency. So only one pass on this with a candle here, and then we had it all rebalanced here. This level is the main threshold of the last up close candle or bearish order block. Ahead of this particular swing high, we have this fair value gap right there. And I have it noted to this candle right there, and it rebalances to this price point there. So our next level on the upside, we should see 111.65 on euro. Now we do have a small little fair value gap in between here, and I'll map that. Okay, so equilibrium is right here. So we could see it come back down to consequent encroachment of that fair value gap here. I don't think it needs to come back down below anything here. This is kind of rebalanced, really nice. It's efficient. Both sides have been passed through, and it's above inside this liquidity pool. So there's really no necessity for it to come back down into here. If it does, that's, in my opinion, far less probability that we're going to shoot higher. It just means we're probably going to go back in the range. And so I don't want to see that. I'd like to see it, if it come back down into this area, pick up some more liquidity, capitalize the bottom of the fair value gap, and look to run into here and maybe even the equal highs that remain around 112.30. Moving on to British pound, we had a real classic week here, Tuesday low of the week, at a level we were already identifying ahead of the new week. We're looking for a retracement lower. It went down into it beautifully, rallied up, left equal highs here and in here. Fair value gap, run down into consequent encroachment. Beautiful consequent encroachment right to the pip. Explodes up, comes back down, repopulates at a fair value gap into a bullish order block, and then expansion on the upside and reaching up into premium array. That if we go out to a 4-hour chart, it's the middle of this fair value gap, which it trades up into here. We retrace, expands up, and we have just a little bit more of an imbalance still left in here. It would be rebalanced at 123 big figure. So about 15 more pips or so, which it probably will be opening up. I wouldn't be surprised on Sunday opening up higher and then creating some kind of a gap. Really nice structure down here in terms of a market structure. We have a low, a lower low, higher here, and then higher here. So this is a long-term to intermediate term low. And like I said, it looks like we got a little bit more room to the upside. We have all of the fair value gap and SIBI in here that can rebalance, and then we have a small one right in here that I don't really like this one too much because we have this old low. So it's all right in here before we have probably a meaningful retracement, if at all. And then we have these relative equal highs. So I have a little bit of a liquidity pool at 125.80 to 126 big figure. And that's assuming, again, we get this complete breakdown on the dollar index. All right, so the question is, am I going to teach what I did in the dollar CAD? I got a lot of response to that because I tweeted, can I show you what I'm not going to teach you, or I'm never going to teach you? That is the highest form of what I know, and that's all part of the stuff that I'm not really allowed to teach you. So everything in the mentorship, and I know some of you are going to be like, what, I'm out of here. If that's how you feel, then leave. But I'm telling you, there is so much more that you're going to learn. I just demonstrated today just to answer someone that felt they understood me and think they understand what I do. I don't need a directional bias. I don't need to have the market moving in one direction. I don't need to have a buy model or a sell model. I can work in mess. I can do that. If I want to sit down in front of the charts and spend a couple hours just deciphering everything, that's it. And what you saw today was my personal algorithm, which I dubbed it as Enigma. You're never, ever, ever going to touch that. You're never going to learn that. I'm never putting it in writing. I'm never teaching it in a video. It's never being done, ever, period. So don't ask. You can get offended. You can get mad all you want. It ain't changing my mind, okay? Now, what you are learning in the mentorship is gold. What you're going to learn as a charter member is gold. What you're going to learn with the trading plans and price action models, gold. When we get into the actual breakdown of the models in the trading plan and including algorithmic principles, you're going to get really close, really close to some of the things that I did in today's dollar CAD. But you won't have everything. And that's not meant to be upsetting to you. I'm not trying to be, a tease. I'm not trying to hurt anybody's feelings. But there's just certain things I'm not allowed to teach you. And those things are it. So, again, I did it just to answer critics and a guy that felt he understood me because he watched some videos. And that is, again, just to show you that I don't need to be waiting for a market that's trending. I don't need that at all, okay? So, again, a lot of folks on Twitter don't realize who's talking to them. And I'll be honest with you, none of you really do either. But you don't know where I'm taking you, okay? So don't be upset. Don't be sending me emails. Don't be sending me messages on the forum. Don't be sending things directly in Twitter. Oh, you're not teaching everything. No one teaches everything, okay? You always hold something back. And these types of things I want to teach my kids. If they decide to trade, then I will teach them this. But none of my kids are interested in trading. So, all right, so I want you all to relax this weekend, enjoy the weekend, try not to spend too much time with the information. I know most of you probably have businesses or work, and you have things that distract you all week long, and you kind of like want to plow into all the trading knowledge and lessons that you can get on the weekend. Just as a casual reminder, try to balance yourself, because if you put too much on you, okay, let's put it this way. Just like you can't spot reduce body fat by doing 1,000 sit-ups, that doesn't work. You have to do things with the proper approach. And you can't cram all my content into one short weekend. That's why I don't think these weekend workshops or these weekend seminars, they're not worth anything, because you're not learning anything. You're going to learn about something, but you're not learning it. That's why when you pay here, you pay for your 12 months and you pay for your conversion for a charter member. You don't pay anymore. That way you're never worrying about payments ever again. You're not worried about having to keep up with the payments. None of that stuff. You're only focusing on learning, and you're spending time with me every single week. And if you have not found value just in the last 3 weeks, I very specifically told you there are certain things that we're waiting for. Yes, there's going to be times when you're going to hear me say, I got to wait, there's nothing I can do right now. And it's not what you want to hear, because you're like a sponge right now. You want to soak up everything. You want to get in there, you want to practice. You want to see what I'm going to call next. You have to let it balance and rebalance. There can't be a trade every single moment at the level I'm teaching in the mentorship, because I'm highlighting things only from a month one perspective, as I said in Wednesday. Everything else is all on you to practice. Now, there's lessons that you're going to learn, obviously, that we haven't even touched yet, but you have to go through the process yourself of practicing and doing the things I tell you to do. If you don't do it, just watching my videos and listening to me rant is not learning. That's not absorbing anything. You're not, graduating in your development. You're being stagnant. It's just like watching TV, and it's a waste of time. And you certainly don't want to be here wasting time listening to me. You want to be going to the chart and see, is the things I'm teaching in the chart right now? And if I'm highlighting something and I'm pointing into the charts about specific things to unfold, that's where you're supposed to be practicing. Why are you practicing going short down here in Eurodollar when we're down here? Why are you looking for fair value gaps to sell short at? This is exactly where we were aiming for. So IPTA was going to go to this level, then what? Reprice up to here. Exactly what I said on Wednesday. So again, pay attention. Enjoy your weekend. Be safe, and I'll talk to you guys on Monday by way of the forum.